What's up, everyone? I hope you're having a good night. We're going to be talking about Lucid Group, currently trading hands at $24.84. This is not financial advice. Trade and invest at your own risk. Now, the stock was moving up nicely today, up about 10%, and then moving down after hours, 14.29%. So, strong pullback. I've foreseen this coming. Everyone else should have too. Why? Because very poor earnings. So a lot of times institutional investors slash hedge funds, when these type of things happen, these really poor earnings, they'll start buying in really heavy to juice the price up to make everyone think, oh my God, there goes the price, and people get fooled by this and they start buying in. They're just trying to get the price high enough to escape their positions. They get the price up there a little above $29, and they buy up real heavy put options and they dump all of their shares. And I'm going to show you some manipulation going in where they're doing that now. Here at the end of the day, they're buying in heavy, getting the price up, buying put options, dumping, and repeating that. So anyhow, when you see really poor earnings, even if the price is going up, there's a red alert there. Very poor earnings. So love the stock, love the company. But for those of you looking to average down, looking to get in the stock, this is not financial advice. Trade and invest at your own risk. But what we got to do is look at where the stock is going next. So we're going to look over some numbers, look at where the stock has been recently, look at earlier in the year, September, where we were and where we're probably going. Because I do believe this is a great investment, but you got to get in a good price, especially considering these poor earnings. So anyhow, let's keep it moving. So look at these poor Q4 earnings. Expected EPS minus 35 cents, actual EPS minus 64 cents. So almost twice as bad as they thought it would be. So when you see something like this, not good. I hope anyone invested in this, when you've seen the price at $29, assuming you were at a profit, you sold and got out. Because the next thing you're going to see is a downward spiral in the price, some consolidation, profit taking, and then that turning into fear of losing capital. Because look at Q4 compared to Q3, and then anyone who watches my videos knows, as I said, my concern is what are Q1 profits going to look like. So anyhow, we're going to go into some more info on what I foresee coming and what to do next. So let's keep it moving. Now, today's low is 26.17. The open at 26.75. The 52-week low was 16.12. I believe that was on September 1st when the share lockup expired, because I think I got in at 15.78. And but as I was saying, on September 1st, I bought it at $15.78, the share lockup expiration date. And if anyone's interested, it's on my Facebook. But a little before September, I was warning everyone that due to my technical analysis of the chart, I foresee Lucid falling to around $16, and no one knew the share lockup expiration date was coming. So obviously that's was from my technical analysis. So again, just from my foresight and reading the charts, I got in at $15.78, ended up holding until $55, great profit. So, that's, if anyone wants to go look on my Facebook, feel free, but honestly, I didn't care to go on Facebook and screenshot and get all that information. I just need to get this video out because market close is coming and I have some more moves to make before the end of the day. But I'm assuming you can take my word for that, or go look if you care to do so. Anyhow, I'm always getting messages and calls and it's distracting. But anyhow, moving forward, I'm going to show you what I think is coming next. So if you're invested, where best to average down looking forward. And I'm not going to worry about every little spot. Well, you can get in here and then sell here and then get in here. I'm just going to talk about ultimately where I see the price falling to, maybe the last two lowest spots here. So if you haven't got on Lucid, I love the stock. I love the company. And as you see, the 52-week high was $57.75 at the time. Analysts were calling a high of $45, so the stock performed very well and exceeded that high. So anyhow, let's keep it moving. And I just wanted to show you here between 4 o'clock and 4:10, we had a move between 26.20 and a high of 28.98. And generally, what a lot of times these guys do, they buy in really heavy low, they buy in high, they buy put options, and they sell them, and they create the volatility to sell them and make a lot of money. So we're just going to flip through some pictures where they were doing this here at the end of the day to make some money. I think what they're trying to do is make a lot of money here to mitigate their risk, and so they can escape their positions, make some money, because I think we're about to see some pretty decent downward momentum in the stock. So let's keep it moving. Now this is just showing you between 420 and 430, a little movement here. This was nothing significant, but then you see we had a jump from 25.70 to 28.98, and a jump from 25.10 to 28.98. Now I do want to point out to you, even though it says this is the 52-week low, $16.12, that is not accurate. So as you can see here, this was the low was, it says $16.12, August 26th to September 2nd, 2021. The low of $16.12 was actually on September 1st. As I stated, I just remember buying my shares at $15.78. So again, candlestick charts are just not accurate, period. The price that day went down to about $15.30. So the price actually went a lot lower. So I just want you to keep that in mind, because it is relevant. And you know, the fact is, I'm not looking to buy back into Lucid until, well, I'll just put it this way. I'm going to buy 50% at $20, the other 50% at $17. So, you know, that's what my plan is. So how you do it is up to you. It's your money. But I'm just giving you an idea where I'm at with the stock. Again, I love the company, love the stock, but I'm going to get in on what I think is the lowest possible prices, and how I exactly play it, we'll see. I play it day by day. As you know, we got the March CPI report coming. I think that's going to be ugly, and I think that might swing the broad market down. So there's a chance, let's say I buy in by $20 by then, when it moves up some, there's a chance I may sell the shares and then buy all of them at, $17, assuming that's occurs. So that's why I said I can't give you my exact specific plan here. I'm just trying to give you some scenarios that I'm planning on. Plans change, but, then we're going to have Fed set to raise interest rates 25 basis points starting in March. And, even though that's to offset inflation, there's fears of the Feds could raise interest rates 50 basis points. I don't think that's going to happen. But my point is this, regardless if it's 25 basis points, it's going to shake things up. Mortgage rates rising. It's just, I'm not going to go into all that. And I've discussed that in previous videos. But the bottom line is, we're looking at volatility. And of course, the Russia-Ukraine situation. We had some significant dips that presented some great opportunities and some great upward momentum. And just as we're seeing this dump here, I think we're going to be looking at some other dumps coming as well. So just be careful, set your stop losses. So anyhow, let's keep it moving. Now, as you've seen this last low here on February 24th, 21.70. This last low here on February 24th, $21.78. So just keep in mind, moving forward, we could easily see a return back to around $22, $23. And again, it's a kangaroo market. We're going to see some ups and downs, but ultimately, and I may trade the stock in between here and there, like I do with lots of stocks and cryptos. But as far as getting into the stock and settling, like I said, I'm not going to get in and settle until $20, 50%, the other 50% at $17. So anyway, let's keep it moving. Now, this just gives you an idea of what the charts look like the past year. And just to say that, again, I do see a return to $20. So, Again, I got the just about the $19 mark there. I do see a return to $20. For those who don't have the foresight, what type of panic reaction are we going to see though once we start to get lower and lower? And that's again why I said, I think when we hit $20, we may see some upward momentum, maybe to $23, $24. Who knows exactly, but my point is this: we may see that panic straight from there to $17. I'm not sure. It's just I'm just trying to give you some scenarios here and why I think there's a good possibility that we could see that low of $17. Which, like I said, I know the actual low, the 52-week low was more like 1530 something. So let's say the price goes to 17, we are still about $1.70 over the 52-week low. So I don't think it's far-fetched, and that's what I'm looking for. So anyhow, let's keep it moving. But I just want to say, I will say Lucid has the most stubborn investors I have ever seen in my life. It takes so long to get the price to consolidate down, and for these investors to catch on that the price is going to be moving down. I hate to see how many investors are bag holders of losing bags. I tell you, man, this one takes a lot of patience waiting to buy. Not quite as much waiting to sell. They juice the price up quick, but it takes them a long time, most of them it seems like, to catch on that the price is going down. And we're going to talk a little bit about why. When you have people like this on November 23rd, 2021, telling people from Seeking Alpha, which is a pretty popular investing site, that a lot of people and a lot of investors, take some amount of, it gets around, but anyways, he says, I've just invested half of my net worth in this EV stock, and he's clearly talking about Lucid Motors. So let's take a look at where Lucid Motors, how much it was trading for at that time, November 23rd, 2021. The stock was trading for $52.44. So he put half of his net worth. Now, he didn't say he's trading it. He said he's investing it at this price. I'm not going to say anything negative about this individual, but I do want you to remember this in the future, as I've said it, about Investors Place, because when you find out that these people have blown smoke up your ass, it's important to remember. So again, he said he invested right at $52.44. So let's see what Lucid Group's 52-week high was. $57.75. Now, he never came back out and posted an article saying, hey, I sold, maybe I shouldn't have put this information out, encouraging people to invest when Lucid is juiced up, when the all-time high by most every analyst at the time was $45. It's just terrible guidance to give people, plain and simple. And just take a look at the chart, look at the consolidation, and let's take a look again where we are today. Well, the price was a bit higher than from, the past 3 months. So let's just say someone would have listened to this guy, they would have lost about a little bit over 55%. So, that's what his guidance got anyone who listened to him. 55% loss. And, as you can see, if we get down to $20, $17, the losses are just going to keep stacking up. So I just wanted to point that out. So here's my question for people like this guy and people with Investors Place. All these people, when they come and start juicing up stocks after they're all juiced up, why aren't they recommending the stocks ever when they're beat down, like on September 1st. That's when you recommend a stock. Anyhow, thanks for watching. See you on the next one.